All right, so welcome to this class. And in today's class, we're going to be looking at liquidity on what? On live charts. In the previous classes, I've been able to teach you liquidity using illustrations and a bit of live chart. But then in today's lectures, we are strictly going to be looking at liquidity on the live chart. So this is GBP USD on the 15 minutes time frame. Yeah. Now, just a recap of what I taught you in the last class. I told you guys that from a swing low, all right, from a swing low to maybe let's say a swing high. All right, if we have price doing this, okay, then we have a range. A range now comes from the swing high. All right, a range comes from the swing high to what? To the swing low. Now I told you guys from the previous classes that what we have lying above this swing high is what? External range liquidity. And then what we have lying below the swing low is what? External range liquidity. Okay, but then all this internal highs and lows, okay, they are also significant. They also mean one or two things. All these internal highs and lows, they also have buy side and sell side liquidity below or above them respectively. Yeah, all right, they also have buy side liquidity above the highs and sell side liquidity below the lows. In this case now we have lows here, so we have sell side liquidity below them. Now these internal lows, all right, they also have liquidity. And then what we actually look for price to do is to what? Grab the opposite liquidity to the trend. Okay, so what I mean is that if we are on an uptrend, okay, we look for price to grab sell side liquidity to be able to what? To push higher. Okay, I'm going to take that again. I said if we are on an uptrend, we will look for price to grab sell side liquidity and then push higher. Okay, this means on the inverse that if we are on what? If we are on a downtrend, yeah, if we are on a downtrend, we want to see price do what? Grab buy side liquidity, yeah, before it does what? Before it moves lower. Does that make sense? All right, if that makes sense to you, just send in some fire emoji to the chat box, because right now I'm going to be diving into the live chat example. If that makes sense, my students, just say it makes sense. Just say it makes sense. It makes sense. All right. That's nice. That's nice. You guys are following. My students are following. That's amazing. Yeah. So now looking at the live chat here, first of all, okay, you have to be able to identify your trend. Very much important. Okay, now I'm going to teach you guys how I identified my how I actually got my buy N3 yesterday on GBP USD. Okay, now looking at this, okay, looking at this, I'm only analyzing on M15 right now. All right, looking at this, you can tell what trend we are on automatically. Yeah, you can tell that we are on an uptrend. Okay, now, let me rewind this because I want us to, let's start from here. All right, let's start from here. Okay, now I anticipate price to move on. Okay, now I've been able to identify what? That this is my swing low already. So I know that I have my swing low at this point. Okay, so let's see, price keeps on moving. Price keeps on moving. Yeah, price keeps on moving. Now at this point, something has happened. I have identified that this is what is also a low. All right, this is also a low. And in this scenario, this happens to be what? An internal low. All right, so what do we have resting below this internal low? We have what? Sell side liquidity. Do not forget that, guys. We have sell side liquidity resting below this internal low. All right, now it basically means that I anticipate that price will do what? I anticipate that price will come down, grab sell side liquidity, because this sell side liquidity is acting as a magnet to price. You know, when you bring out a real magnet and then you take it, maybe you bring a piece of iron close to it, the iron will be attracted to that magnet by virtue of the magnetic field. Now, that is the same thing that liquidity does to price. Liquidity attracts price. Okay, when you get to when we get a little more advanced, you're going to hear me talk about something like the draw on liquidity. Now, when we talk about draw on liquidity, okay, I basically mean liquidity that attracts price. Okay, price will not move until it has swept that liquidity. Okay, now in this case we have what? Sell side liquidity lying down below this low. All right, and price will most likely want to reach out for this sell side liquidity. All right, now we have still not identified our range. Okay, let's say, okay, at this point now we have what? We have what? A swing high. We have a swing we have a swing high over here. All right. Now I taught you guys something about the liquidity metrics. Okay. I taught you guys something about the liquidity metrics. I told you that, okay, now in this case, let's assume we have our range. Okay. Let's say we have our range to be this. We have our range to be this. All right. Now, before we want to look to buy at what? At discount. I taught you guys all these things. Now we're going to highlight our what? Our Fibonacci. Okay. Now you can see that this sell side liquidity is what is in line with the 0.5 level. So it means we will be waiting for price to do what? To go down below the 0.5 level. Okay, go into discount, same time grabbing sell side liquidity. All right. I don't want to talk about point of interest because we have not reached that place in our syllabus. So I'm just going to stick to the liquidity and explain using that for now. All right. So we will want to see price go what? Below the 0.5 level, go into discount, grab sell side liquidity below this low, and then we'll have to see, we'll look for price going up from there. All right. Now, so price has not reached below the 0.5 level yet. Okay. So we would not take buy trades because at this point, price is expensive. Okay. The price is too expensive. We do not want to buy at a high price. We want to buy at a discounted rate. So we're just going to keep watching price because at this point, our setup is not yet ready. So, okay, now something happened. Okay, something happened. Look at what happened. First of all, let me take away this Fibonacci retracement tool because at this point it has been invalidated. All right. Now I'm taking away that Fibonacci retracement tool. Price did something. Price formed. Okay, price formed a new low at this point here. Price formed a new low at this point. Okay, price formed a new low at this point. Now, and then price also did what? Formed a new high at this point. Now, this means in this case we have here to be our swing high. Let me take it to H1. Possibly we are going to see this clearly. All right. We have this to be what? Our swing high at this case. In this case, all right. So now you can tend to still maintain this as your what? As your you can tend to still maintain this as your liquidity this way. Or if you want, you can decide to join into this with this and say, okay, you have trend line liquidity over here. All right, not bad. All right, you can still do that. Now, if you do that, you're still expecting that price will still come down and grab this whole liquidity before going up, because the liquidity line below these lows is acting as a magnet to price. It is magneting price, it is attracting price, and price will not completely go above or will not completely buy until it has grabbed that sell side liquidity. Okay, now that is the idea of this. I have to mute everybody again. Okay, so the liquidity line below that low is acting as a magnet to price. Now I want to go back to M15, okay, and then I'm going back to M15. So let us keep watching how price will actually play out. Now, this I'm explaining how I actually got my entry, okay, using liquidity. I'm explaining only the concept of liquidity. I'm not really talking about point of interest because we have not reached that place yet. I think after we're done with liquidity, then our next topic, we're going to be talking about entries. All right, that is what we're going to be talking about next. So let's keep watching what price did. All right, now at this point, price has still not what? At this point, something has happened. At this point, oh my guys, it wants to rain here. I just hope my network does not go out. I just hope my network does not go out. Yeah. Now, so at this point, price has grabbed what? Sell side liquidity. Okay. If you notice, if you look closely, you will see that what price has gone below this low. And this is what we are looking for. Price has taken out what? Retail buyers. Because I told you guys that the idea of liquidity is that we have retail traders doing what? Buying and putting their stop loss below the support level. So they are buying, and then the smart money, the big boys, the institutional traders, they know that, guy, we have lots of stop losses around here and we need to grab this money. Now, what happened? Just assume they were still in this trade. Their stop loss will have been hit by this point, and they will have lost money. Okay? They will have lost money at this point. So now the institutions are like, yo, we've gotten their money. We can now go up. All right. Now, you that understand this ideology, you that knows this concept, all right, you will get to know that, okay, you expect, of course, that price should grab sell-side liquidity over here. And then at this point now, you get to snipe your entry. All right. I'm not really talking about entries right here. There are still other things you look out to in terms of entries. I'm going to talk about that in our next class when we get to talk about entries. All right. Now, at this point is where you get to snipe what? Your entries, and then your take profit will be what? At external range liquidity. All right, you're going to put your take profit at external range liquidity and then look at how price will definitely play out. And this is how I was able to to catch that sweet trade on GBP USD yesterday. You definitely see that the idea of liquidity will play a major role in this. Right now, I want to go to Euro USD and give you the same and show you something similar. Yeah, I want to show you something similar on Euro USD. Something similar on Euro USD. All right. Now you can see how I was able to also catch this particular sniper move over here too. It's still the same idea of liquidity. It's still the same idea of liquidity. Now, what happened over here? All right. What happened over here? Let me explain. I'm still going to use the replay button, blah, blah, blah. Where is it? All right. From this point, let me start from this point. Let me start from this point. Yeah, because I taught you guys market structure. I taught you guys what is it called? I taught you guys market structure and how to identify a market structure shift. Okay. So we are going to be using that ideology now. So watch closely. Now, price has formed what? A high. We are coming from a downtrend. Price has formed a swing high. Yeah. So on the downtrend, we do not want to see the swing highs taken out. If we see the swing highs taken out, then it means we've had a market structure shift and the downtrend is most likely coming to an end. Yeah. Now, something happened. Okay. At this point, we've had what? Market structure shift at this point. And then we know that we are currently looking for buys. We are currently looking for buys. If you look closely, price has formed what? An internal low. And from what I've been teaching you guys, I told you guys that what exists below an internal low is what? Sell side liquidity. So you can identify this as what? As your sell side liquidity. Yeah. Because we anticipate that price will definitely go below it. Now, price does all the up and down movement, but then we are not taking a buy yet because we anticipate that price will go below it. Even if you get to consult your Fibonacci, you know that we don't want to buy above the 0.5 level. We want to buy below the 0.5 level. Okay, now that is you buying at discount. So you can see that looking at this the same way, your low is close to 0.5 level and we want to see price go below it. That is very important. Now we're going to keep watching what happens. Now at this point, price what grabs sell side liquidity. Now don't forget, a lot of retail traders would what have bought at this point. A lot of retail traders would have bought at this point, putting their stop loss few pips below, and then they definitely got stopped out at this point. And that is what the institutions want. That is what the big boys want. They want to take out the retail trader stop losses. Well, you understand the concept because of course you are expected to understand the idea of liquidity. So you wouldn't go in when other retail traders are going in. You want to go in when the institutions are going in. All right. So at this point, the institutions are what? Taking out sell side liquidity, but from this entry area over here, which we're going to be talking about in our next class. All right. And then you can see how the market went. You can see how price went. So smooth. All right. So smooth. And then in this case, you get to what? TP hit and then you are good. Now, where do you put your take profit? You put your take profit at what? External range liquidity. That's how simple this game is. That's how simple this game is. If you're following me, if you are following me, send in some fire emoji into the chat box. Just if you are feeling this thing, if you're feeling the knowledge, yeah. If you are feeling the knowledge, send in some fire emoji. It's raining here already, and I just hope my network does not go out because it's kind of crazy. So if you are feeling me, yeah, if you are feeling the knowledge that is being shared in this call, send in some fire emoji. That's amazing. That's amazing. Both my students and those who are not my students are really feeling this, and I love it. All right, so I'm just gonna show us one more example. Yeah, I'm gonna show us one more example, and then I think we're gonna call it a day. That's the network will go out in Jesus' name. Amen. All right, so let me show you guys one more example. Yeah, of liquidity. See, if you're able to understand liquidity, you would not. If you can understand the concept of range, the concept of liquidity, you wouldn't get stopped out unnecessarily. All right, you wouldn't get stopped out unnecessarily. Let me also go back to let me use gold. Let me just use XAU for the next example. All right, so now looking at XAUSD, yeah. Please, if you can still hear me, all right, just type in I can still hear you. If you can hear me, just type in I can still hear you. I actually muted my mic before, but if you can hear me now, just type in I can hear you. All right, now amazing. So looking at XAUSD, all right, I actually had an analysis, okay, a live chart analysis on this index. I had a live chart analysis on this index, and then let me show you guys what I had. Now let me show you guys what I had. I already made an analysis on this gold, and it was still what? It was still the liquidity setup. Okay, it was still the liquidity setup. So, but then I'm gonna explain it. For those who are on the call, people who I don't know, but I'm actually looking to buy gold. But let me not just cast a shadow. I was looking to buy gold from this zone, and you can see it's already rejecting. So if I see an entry confirmation, I'm going to go in for a buy and possibly TP somewhere around here. But then this is a class, so let me just explain what I'm here for. Now, looking at gold, all right, this is the present price, what's it called? Present price movement on gold. All right, let's start from here. Now, at this point, I've taught you guys the idea of market structure. Now, we have this to be our swing low. Now, why is this our swing low? Because this is what this has been able to do, what, to break previous low. Now, this is not our swing low, sorry. This is our swing low over here. This is our swing low over here. But for some reasons, okay, for the reason of displacement, all right, now this other block here might actually hold for the reason of displacement. That is a little more advanced that I don't want to go into right now, okay? But then let us look at this from our H1 time frame. Let's look at this from our H1 time frame, yeah? Now, in as much as we have this to be our swing low, I think I should even highlight that. We have this to be our swing low, and then we have this to be what? Our swing high, yeah? So automatically we have what? We have price moving in this range, okay? Now, if we are looking at this, I'm waiting for my H4 to load. Let's move, all right. Now, if we are looking at this, all right, for the sake of this displacement, okay, I anticipate that price might face bullish momentum from somewhere around here, okay? But then if price is able to sell down below, we might be looking at something good from around here or around here, all right? But for some reasons that I cannot explain because it's a little more advanced, we could see price buy from this region, all right? So let us go back to M15 and see what structure actually played out. Now we've highlighted our swing high and our swing low. We've known, okay, this is another block that also is a rejection block on H1. So let us see what price will actually do. Now at this point, we have price forming what? Internal lows. All right. Now at this point, price has been able to form what? To form a low. Now with your knowledge of liquidity, what lies below this low? It is definitely sell side liquidity. All right. You keep on watching what price is doing. And then price does something really amazing. What did it do? A double or an equal low. And I told you guys something. Equal low is a type of what? Internal liquidity. So what we have lying below this equal low is nothing but we have lots of money, because at this point, lots of traders are already buying the market. Okay. At this point, lots of traders are already buying the market. So we have what? Piles of money. We have piles of money below this low. And definitely price will come to grab this money because it is acting as a magnet. When you have this ideology, okay, that is the simplest way you can see liquidity as. Liquidity acts as magnet. It will definitely draw price down. Even if price goes up, does all the shakara and anything he wants to do, price will definitely come down for this liquidity, because this liquidity here acts as a magnet. All right. So I analyzed this earlier. Okay, I knew that okay, definitely we had equal low liquidity and price will definitely come down. And if price is coming down, I anticipate that okay, we might see some bullish move from here. But if price has enough momentum to break below this, then I already told you earlier where we are going to be expecting price to reach. Okay. But sticking to the ideology of liquidity, we know that okay, we expect price to come and take out this equal lows. So let us see what price did. You see, even with the whole shakara, price went up. Oh, price will still come down. This is acting as a magnet, as a drawn liquidity here. Now at this point, price has gone what? Price has been able to break below these lows, and at this point, yeah, price has what? Has grabbed sell side liquidity, and price is now reacting towards my zone, which I might look for buy entries later on. I don't think it's not ripe yet, yeah? Yeah, it's not ripe yet. Okay. So if I see my entry confirmations, of course I'm going to take my trade. And then what I anticipate is that if everything plays out, okay, plays out pretty well, we'll just see price do maybe some little steps here, and then boom, we're going to see price go up this way. It's very much possible. But if price breaks down below, then I told you guys we're going to be looking for maybe possible buys here, unless something else happens on the chart. Yeah. So that is the idea of liquidity. Whenever you see liquidity, you do what? You anticipate price to take it out. Now use your external range liquidity as your take profits. Now assuming we are able to buy price here, all right, with our stop loss at this point, I will be looking to take profit at what? At external range liquidity. Now external range liquidity is what? My swing high. I'll be looking to take profits at my swing high. Same thing I did for the GBP USD I showed you earlier on. Same thing I did for my GBP USD I showed you earlier on. Taking profit at what? My swing high, which is here. Swing high. Take profit at there, at your swing high. As simple as that is. So I think that will be all for now. Should I take questions? All right. If you have any questions, please, in like 2 minutes, type your questions into the chat box. Yeah, so that I can answer 1 or 2 questions, and then we're going to be done for the day. And I saw someone requested that I should post this video on the free channel. I'm sorry, I cannot post this video on the free channel. I only share the link so you could all join and benefit. The record is going to be available to only the paid students. Okay, this record is going to be available to only the paid students, people who have access to the course. All right. So if you like to be a part of it, then you can join the course. But I'm sorry, this video will not be up on the free channel. Yeah. But if you have any questions, you can actually drop them on the chat room now. So I will read an answer. That's in 3 minutes and I'll be off. So yes, to my students, all right, to my students, this is your assignment, okay? Go in on your charts. I will really prefer you do this on the 15 minutes time frame, okay? I'll be specific with the time frame this time around. Go on your chart on the 15 minutes time frame. I want you to do what? Highlight, the one is highlight a trading range, okay? From your swing high to your swing low, considering the trend, okay? Now that is your first thing to do. The second is what? Highlight what's the internal liquidity, okay? It could be internal lows or internal highs, but then highlight them for me and show me where you think the liquidity lies and what you expect price to do. All right. So Bartholomew, the class moderator, please take note of this. All right. So take note of this. For my students, your assignment is go on your charts, highlight the trading range. What I mean is this. Let me explain again. I want to do the assignment so that you will understand. Highlight, let me use XAU. Now, what I want you to do for me, okay, is you come, you highlight possibly your trading range from the swing high to a swing low, okay, to a swing low. Then you tell me where you think the liquidity lies, all right? You tell me where you think the liquidity lies, all right? You tell me where you think the liquidity lies, because at this point also, we have trend line liquidity over here. At this point, we have sell side liquidity or equal load liquidity, anyone you want to call it. Anyone you want to call it. Yeah? So that is your assignment. I would love to see it tomorrow so that we can actually have another Zoom class tomorrow, 8 p.m. for my students alone. And I will not be sharing the link to the free channel. It will only be for those in the paid group. Please, if you have a question, just type it immediately and drop. I have less than 5 minutes here. Haptech is asking me what my opinion about stop loss is. Now, I put my stop loss that way because I have not taught you guys entries yet. When I teach you guys entries, you will know how to refine your entries so that you can have a small stop loss and a very considerable risk to reward ratio. All right. So if you notice, when I was teaching, I was telling you guys that our future classes, we're going to be talking about entries. And when I teach you guys entries, you're going to know how to refine your entry so that you can have a very small, not really a very small, but you can have a, let's say, a portable stop loss area. All right. But then don't worry about that. When we talk about entries, you're going to have clearer insight on that. Prosper, you're saying thank you. You are welcome. Say, do big screens, laptop and plasma so decimal contribute to how effective and more clean viewing analyzing the market? Oh, no, excuse me, they give when our phone analyzes, blah, blah, blah. Well, I will really advise you to at least get a laptop, even if you cannot really get a big screen. It's not really about big screen, but just try to get a laptop at least, okay? When you have a laptop, everything will be at least more, you will have a better view compared to when you're just using a cell phone, all right? So if you have a PC, make use of your PC. It will be better off than using a cell phone. Timothy, we will learn inducement in the future. After entries, we're going to be talking about inducement. So I think that will be all for now. That will be all for now. Jorex is asking me when I'll be hosting the next Zoom. That will be for my students. Okay, I think that will be tomorrow even, most likely. Yeah. So I think this Zoom call was helpful. If you are joining the Zoom call, okay, I would love to have your testimonies on my WhatsApp or my Telegram, wherever you join me from. So please, immediately I end the Zoom call, I would love to see your testimonies. What do you think about the Zoom call? Did you learn? All right, just tell me what you think about the call. How impactful was it to you? All right, I would love to see your testimonies on my WhatsApp. So have an amazing night, everyone. It's your Trader King Wesley, and I'm signing out.